Hello traders and welcome to this live intraday strategy webinar ECB Thursday. Today is December 8th. Michael Boutros here with you. Aline, Michael, D, Conwall, Safil, Ziad, good to see everyone here in the room. So we got some announcements this morning from the ECB. We will go over those. Mario Draghi is about to take the mic. I will continue to monitor some of his comments here crossing the streams. So I will read those off as they hit. So be attentive to what's going on in the euro. Largely, the levels remain exactly unchanged. You saw a reversal right off the 2016 open at 108.72. I think the high was 108.73. We'll talk about those levels in a moment. Highlights, basically, the ECB deciding to extend the QE program past March of 2017, which is what the expectation was. It's now going to the duration of 2017. They've lowered the asset purchases in an attempt to start the taper here from 80 to 60 billion euros a month. So a taper, at the same time an extension. A little bit of a tricky play on how we're going to look at this in the broader term of things. Don't want to get too much into the fundies, guys, because price action's on the move right now, but we're still looking for this pullback. Same levels as yesterday, near 106.60 is a very interesting level of support. Initial support coming up right here at 107.10. But certainly a very interesting play by the ECB, okay? So what we're waiting for as far as his comments right now, and I'm just going to be reading these guys as we go through, so excuse me if there's any silence. What we'll be looking for right now through his presser is if there's any change to the capital key. The capital key is essentially a guide that dictates what assets the ECB can purchase. So if they sort of expand the parameters of the world of where they can get into regional or corporate debt, you know, that will be certainly a shift and opens up really the ECB's ability to continue these asset purchases. They're really running out of things. So essentially that's what we're looking for as these comments continue to cross the wires. It says QE purchases will be adjusted in January. I have a couple of different chats going on with traders around the city here as well, so forgive me, guys, if I see any pauses here. We'll buy assets yielding below the deposit rate, sees rates at present, lower level, well past QE horizon. ECB can buy assets below deposit rate is something that's coming up on multiple wires. ECB will buy assets yielding below deposit rate. That's 3 different wires coming up, highlighting that major level. So the yield essentially below the deposit rate, which is essentially already pretty darn low. Okay, near term, I still think the immediate risk on this pullback is to the downside just off of that reversal of where we went off of. So guys, just real quick, here's where we were yesterday. We were highlighting near-term resistance 108.22, 108.72, a little bit more critical at 109.08. We reversed right off the yearly open and a very sharp reversal to the downside. We've already made an outside candle just based on today's price action already. This is pretty bearish. On this pullback, I do want to see if we hold that 50 line. You have a couple of different things lining up there on the near term as well. Okay, you have sort of the weekly open, well, we gapped from there, so Friday's close, the 50% retracement, that gives you 106.50 into 106.60. Here's what the intraday chart looks like. Okay, we went right into the yearly open and reverse. That's something you want to pay attention to. Doesn't necessarily invalidate the near-term upslope, but certainly puts the pressure on the downside. Would not go chasing the shorts here, but more so I want to see what kind of reaction we get down here at that 106.60, 106.50 level. So if we can get a move into that, again, I'll be stalking long entries. I still think you're holding within the confines of this formation, no big deal. And again, you know, the fact that they're tapering, leaving the door open is sort of a mediocre play. It's neither excessively dovish, in my opinion, nor excessively hawkish. But if we take a quick look at what's going on in equity markets, you're still trading pretty high. FTSE 100 is up 0.23%, CAC 40 is up 0.43%, DAX up 0.71%. Talked about what the DAX was doing yesterday. Just a quick reminder, guys, we did get that breakout. We closed above 10,953, 10,983. There's really nothing in the way of a push all the way up here into 11,200. 285, let's call it, 90, this region here. Just above that, 11,350, you got the November high day close. But I'd still be mindful of just basic slope resistance off the highs from, what is that, April of this year. So my point being is markets are liking this, okay? And risk on typically, or has been the case, the correlation loosely, I want to say, is usually going to weigh a little bit on the euro. So continue to look for that euro pullback, see if we can't get a reaction near that 106.50, 106.60 level. Again, here's what the larger picture looks like. This is the 4-hour chart. Take a closer look at the 1 hour. Still not even in oversold territory yet. Bring it to a 30-minute. Now you're starting to get a little bit more of an acceleration to the downside, which is why I wouldn't touch this right now. And then I'll bring you the 5 here and the 1 minute. You can see we'll be watching for signs of near-term exhaustion here as we get into that region. ECB says 2017 growth at 1.7% versus 1.6, so an uptick there. 2018 growth at 1.6, steady. 2019 growth also at 1.6%. So a slight uptick the expectation for 2017 growth. Look, the ECB wants to taper, okay? Or they want to prolong, rather. They want to hold off on the taper because of the threats that they're seeing. We still haven't gotten the full impact of the Brexit. People are going to continue to cite the U.S. elections as a global sort of headwind for markets, which is, you know, it is what it is. Actually, markets have been ripping nonstop since, but and also what's going on in Italy and the referendum and the outcome there. So they would like to keep an accommodative stance, but this, you know, the data hasn't been all that supportive, and you can see hasn't been all that supportive of them, you know, maintaining this level, meaning they're starting to see the data start to uptick. And you can see that here in their projections, as you see an uptick in 2017 growth GDP from 1.6 to 1.7. Draghi says risks to euro area growth remain tilted to the downside. No signs of convincing upward trend in core inflation. And then that downside risk continuing to come up on a couple of different headlines. Says inflation to pick up significantly at the turn of the year. But as of now, no convincing upward trend in core inflation. And specifically, it says inflation to pick up a little significantly on energy. So a little bit narrowing down that energy market, and certainly crude prices, you know, they've come off quite a bit since that OPEC meeting, but we'll go over those later in the session. Inflation seen rising in 2018 and 2019, says Draghi. Inflation, here we go. Inflation forecast for 2017 go to 1.3 versus 1.2%. 2018 go to 1.5 versus 1.6. So an acceleration in the front end near 2017, in the back end of the curve, 2018 pushing it down from 1.6 to 1.5. 2019 inflation seen at 1.7%. Euro area inflation averaging 1.7% in 2019. Inflation outlook is broadly unchanged, says Draghi. Okay, I'll continue to bring you those headlines, guys, but I want to jump back into price action. We'll continue to monitor this. I'll be looking for signs of more convincing divergence, some recovery from oversold conditions here on the real near-term charts, but you're pretty much coming into that region that we'll be looking for some support, even on the uptrend, just on the near term. Okay, you got the 50 line right there, converging right around that 106.50, 106.60 level. Any questions on the euro? Feel free to throw them out or interrupt me at any point, guys. I'll continue to bring you those headlines as they come. And again, just to give you a visualization of what I'm looking at, this is just crossing the wires on the Bloomberg terminal here. Just one of the things that I'll be monitoring throughout the session, so we'll see if we can't get any major comments or announcements coming out. Okay, so a quick back recap to what we'll be covering today. We just went over the euro dollar. We'll go over the euro Aus, euro pound, euro yen, all updated in last night's report as sort of a nice little roundabout on the euro crosses as we head into this ECB rate decision. I do want to touch base on the Aussie dollar, which held resistance like a rock again. He spiked a little bit above it, but we continue to hold that. Dollar CAD, dollar yen, sterling yen, and we'll take a quick peek at the British pound, which came off resistance again just now. Crude, silver, and gold, and we'll jump into those as well. All right. So let me keep this chart here on the right, and I will point you guys out if anything comes up. In the meantime, Euro Aussie, here's what the cross looks like. So a little bit of a tricky situation right now because of what we just saw happen in that Euro crackdown, but Aussie held resistance. So you're seeing Euro and Aussie come off at the same time. A little bit of a tricky play here. Now we're making a move back below the monthly open, which we highlighted as support yesterday. This is near-term bullish invalidation. If we make a push below 143, and specifically if we close today below there, take this out into a 4-hour chart, you risk a little bit more of a perpetuous drop down here into 141.83, basically former slope resistance, those former swing lows that you had a couple of weeks. It's a much more range-bound trade, but again, the reversal and the failure to break above the initial weekly opening range high sort of has me looking lower if we do break 43. Very similar to what we're looking at in Euro. I want to see if we find some settling right here into the U.S. Open. Keep in mind the basic trade here was looking for a more prominent rally towards 145.50, 145.70 for a short. We talked about this yesterday and earlier in the week. You know, I don't know if this constitutes an attempt and failure in reversal or not, but, you know, support is support. 143, that's the weekly close from last week, former trendline resistance, and we'll look to see if this finds any settling, any support around this level. Here's the 30-minute looks like again. Not my favorite Euro play at this point, okay? If we do find some support in Euro dollar, I still like the Aussie short while below that key region of resistance. So that would put this in a really good position to show us a lot more thrust, as it were, for a rally towards 145.50. If it crashes through on a 143 handle here on the U.S. Open, sayonara. I don't really want to touch it. Okay, so another one that's on the menu. You watch the U.S. Open. 43 is support. Trying to see if there's anything that kind of comes out here as help. Well, that might help. Highlight support at that same region we were looking at, 141.85 if you see failure here. Not bad. I'll leave that on there right now. Again, I don't want to stress this formation because we haven't gotten many plays off it just yet. Okay, obviously I'm going to dismiss this on data, knee-jerk reaction. But on whole, looks like something we might want to pay attention to near term. Okay, and euro dollar approaching 106.58 at this point. Draghi says fiscal policy should be more growth friendly, should support the economic recovery, says reforms will make region more resilient to shocks, and says QE options include 6-month extension of the 80 billion euro purchase. So these are the options that he's saying are possible and viable. ECB warns of risks to growth as inflation forecasts to undershoot. Okay, tweaks parameters to buy yields under the depot rate if necessary. Draghi warns no convincing quote-unquote signs of upward inflation. We covered that. Very broad consensus for the 9-month extension at 60 billion euros. So there's consensus among the committee on what they're on the move that they're doing here today. decision on QE had quote-unquote very broad consensus. That came up on 5 different news feeds just now, guys. So again, this is going to be reassuring to risk markets. It should keep broader assets still pretty well supported. For the euro, I don't still buy that this is going to be something that's going to be, you know, long-term bearish. So let's see if we can't find some more support here. Euro still holding 106.60 at this point. Again, this is near-term price action we're looking at here. Right in that sweet spot. Okay. Continue to come back and forth to this. All right, guys. Draghi says decision on QE. I covered that. Purchases below deposit rate is an option. Says QE purchases below deposit rate is not a necessity. ECB to scale back on purchases. Okay. It's pretty, you know, constructive view on the markets while leaving the door open. You know, it looks like they're taking cues here from the from the Fed on how to play this. Buying below deposit rate ensures smooth implementation. Interesting. Okay, I want to see if there's any comments on the capital key as far as specifics on opening up the purchases beyond their current guidelines. Okay. How do you determine when support has been found? So Pete, all the same things that we look at in a regular trade, right? In a regular trade, divergence, an RSI trigger, right? Price action. I want to see the initial rebound, and then I want to see another attempt to come back at it. That's when I want to take the stop against that low, but I do want to see a low sort of take effect first. Look, you might not catch the exact low. All right, and even if we find a nice little rebound here, the U.S. market's going to open. It might come and try to test it again. If we miss it, we miss it, but at the same time, I need confirmation, right? I never want to try to catch a swing like this. It's very difficult. Now, for swing trades, your stop is much wider, so you guys are in right now. If you guys are following the swing trades on Jamie's side, then we are currently holding long positions right now, which is why I don't really want to, you know, open up trying to get too aggressive on the scalps because we're long. So we'll see if we can't get this rally started off this region, but D and Pete, we are at support, right? This is where we want to be long for the euro. This is where we want to find a little bit more of a basing in near-term price. Does that make sense, Pete? It really determines what kind of trade we're trying to attack this by. From a swing perspective, we got that little bit more room to breathe as far as our stop. Our leverage is typically lower. Yeah, you know, this is where we want to be long. Conceptually, structurally, it's a good place. From the intraday, loading up on a larger position with a tight stop, you don't really have that signal quite yet. Eileen, that's a very interesting question. If we have time, I'll jump into it. Not much, to be honest with you, theoretically, but I will give it, that's a whole huge discussion. Euro Aussie. Was there any questions on Euro Aussie, guys? I'm going to go back to it real quick before we move off. Look at that beautiful touch. Can't make this stuff up. So again, if that holds into the U.S. Open, excuse me, if we get some another run at this into the Open of U.S. markets with some divergence, we'll see a failure at that level. I would love to see this thing launch sort of a reversal off that mark. A break below, again, I wouldn't want to even touch it. I'm not going to chase it, but the risk is for a drop towards 4180 or this region here. Let's just call it 42 into 4180. Pete says, great, thanks. Hey, you're more than welcome, Pete. Good question. Eileen, I will touch on that, I promise. Number 2, that was Euro Oz. Let's get through all the Euro crosses and come back because we may get an opportunity to take a position here. Euro Pound was number 3. Here's what Euro Pound looks like. Again, broadly, the thing has just made a failed break. I was looking for that rally. Remember, we talked about this yesterday into 85.90. There was a change, guys, in the levels yesterday. I moved this level higher to coincide with a more visibly, or visually, let's call it, clear pivot in price. It kind of was the wrong move. If you were scalping this, I'm sorry. We kind of pushed it right back. The actual previous target was right around that 56 level. Here's what it looked like on the report for euro pound. Okay, here's the previous night's update. And the level was at 85.67. Okay, we kind of grazed right into that target exactly, 85.68 before we turned. Yesterday, I pushed that target higher just on account of what I was looking at in price, and it looked like we had made a more profound breakout above this key level. This changes things, guys. You're approaching the near-term bullish invalidation level, so I wouldn't be looking to do anything until we get down into 84, and I would be looking for exhaustion again near that level. The weekly open, sort of last week's close, you have some slope support there as well, which gave us some nice pivots. So that's the area of support I'd be looking for on this euro pound pullback. Keep in mind, this was the pivot. We opened up, the week looking at the weekly opening range, setting up just below resistance. We like the upside while above that region at 84. This failure and reversal doesn't necessarily mean we're wrong, but near term, you're still risking a little bit deeper of a cut to the downside, I think. And that would coincide kind of with watching the U.S. Open come in and showing a little bit more weakness in the euro before we turn. So an interesting pair, and why I'm not giving up on it yet, is because pound dollar seems like it's coming off its near-term resistance level as well. So if this does show a little bit more of a profound reversal off this region, that weakness could help euro pound sort of find a little bit more of a basing or an area to base off of, let's call. So Adam, yeah, this is the grandpa trade as far as euro pound is concerned. Gramps is looking a little tired. It still looks like he wants to go a little bit lower before we turn, but keep in mind where we are in the broader scheme of things. Here's the daily chart. So if this pivot, look at that median line, how many times we've reversed off it. Boom, 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 boom. If this is a failed attempt, well, then a break below that 84 handle, okay, would essentially open us up back into the decline towards key support. And as it stands right now, like I said, we're making an outside day. It's going to be a very hairy trade or a very tricky trade, let's call it, guys, on the euro crosses in generally. Today's close is going to be important on all of them, especially if it turns out not to be a reversal candle. Okay, we could end up closing higher on all the euro crosses. So just watch today's close. I think it's going to be very, very important. I got stopped out this morning at 85.10, says D. What was that on D? 85.10 for the euro pound. Yeah, I mean, look, that was where I would have, you had a pretty tight stop. That's not even that bad, to be honest with you. But the break below 84.90, 84.78 for me does have me looking a little bit lower on this move. Let's just see what a quick retracement off that low looks like. Huh, 618 comes in right there too. It's meant to be. Okay, right into the 84 handle. We are looking at 84.90 as resistance, says D. Oh, we were looking at 84.90 as resistance. Yes. Right. Yeah. That was the resistance level. That was right here. Look at the pivot that it's done in this region. Support, break, resistance, break, support, resistance, resistance, break, support. Could be a false break scenario. We'll have to see today's close. Again, 84 is going to be the key for me on this D. Exactly, which is why, like I said, that wasn't even that bad. She said that's why I put the stop at 85.10, tight stop as you like. Right. And again, you couldn't foresee a move like this, D. I probably wouldn't have been holding that into the release as it was. So on that break above 85.10, if you got that stop, again, that's just brush your shoulder off and move right on. Now we'll see if we can't get support near 84 to see if we can't get another rebound to the upside. Okay. D says I just got triggered on a buy for euro dollar 106.60. So again, guys, the swing trade's active as of now. It's no change from yesterday's report. Quick reminder that Jamie will be on later today with the midweek strategy webinar. Sorry about the miscommunication there yesterday on the scheduling, but he will be up at 12 Eastern here in New York. Draghi says reducing purchases to zero hasn't been on the table, not discussed. Potential reduction in monthly QE pace. Says confident Italian government knows what to do. Sustainable ECB presence on markets is today's message. Says the ECB presence on the market will be there for a long time to continue to exert pressures on market prices. Inflation of 1.7%, quote unquote, not really close to 2%. Very cautious outlook, I want to say. Very cautious. But by no means is it something that is aggressive on either side. Okay, so they just widened basically the bonds it could buy, guys. They haven't really made any major changes to the capital key. 1.7% 2019 inflation rate isn't really meeting the goal. Now he's just kind of softening the approach, even though they saw an uptick on some of those expectations, kind of softening by saying that's still not meeting goals. It's still below the central bank's target. But the big message here is so far from the comments he said, guys, it's not like they're buying another range of securities or they've widened their asset purchases. So could be the low here. We'll see if euro holds. Okay, so here's an example, guys. I'm going to go back and forth. Sorry, today's session is going to be a little bit ad hoc, guys, as we're going through some major event risk here. So let me know if you have any questions as we go through this. But if we look at this here, look at the euro right now, okay? So you're seeing some waning divergence into those lows on the 1-minute chart. You haven't really gotten that in the 5. The break above the 30-minute on the 5 would certainly be reassuring near term. So keep your eye on that into the U.S. Open. If we get a zoom and retest, it'd be a nice area to possibly look for a long scalp on the long side of this trade. Again, we're fading the initial move. We're fading the immediate trend. So if you're scalping on the intraday, this is where you want to lower your leverage. You don't want to be aggressive on it. But certainly, we're looking for some basing here. Again, from the swing side of trade, completely different sort of mindset right now. You guys are long. Where would you place your stop loss if triggered in a long euro dollar at 106.60? So, Mike, it depends where the entry is. If you're looking at the swing side of trades, the stop there is at 105, so you got much more room as far as this thing kind of sinking lower initially here. For me, what I love to do is use the low of the session. So I'll look to see if we get a pop higher, a pullback, then the entry would be against this low on a near-term intraday position. Looking at this a little bit more objectively from price action on the intraday, here's what the 30-minute looks like. Wow, look at that 50 line, guys. Look at that 50 line. Low is 40. Okay, so even on an attempt, if we had gotten a deeper cut here and gotten entry, the stop against that Friday swing low near 106.25 would be an initial place I'd start to look. Keeping in mind, again, for me on the near term, the 106 break would kind of put me out of this trade. So that's way too big of a stop for me as far as the leverage I'll be using, or I typically would use. But Mike, does that make sense? We're always looking at much more near-term price action, previous swing lows, major support or resistance level. Need to have my stop based on something. Never jump into a trade with, oh, I'm looking for 50 pips, so I'm going to throw a 25 pip stop. That's just, you might as well go to, might as well go to Vegas and go black-red on roulette if that's the way you're going to trade. He says, great, got it, just scalped at the moment. Okay, cool. Good question, Mike. Okay, things are looking good. So we will be back and forth throughout this. Any questions on Euro dollar, Euro Aussie, or Euro pound? Let's jump into Euro yen. Take a quick look at what the yen is doing. Here's Euro yen. Near-term price action peaked just pips below the level that I was looking at 123.47. That is a longer dated 618 retracement. Take this out into a 4-hour, give you a little bit more picture, a little clearer picture rather. This is the daily chart. So here's what it looked like yesterday. We got Euro Aussie. Here's, we'll go over Aussie dollar. Oh, I'm on the wrong page. Here's Euro yen. So this was a big region of resistance, okay? 123.47. It's the longer dated 618 retracement of the entire 2016 range. So not taking the actual peak in price from last year, but moreover taking the high that we made in January to the low that we made in June. 618 comes right there. You have a host of confluence resistance levels, the median line off the low, the 50 line off the high for the broader multi-year formation we're in. They both converge right there. Is that the tag? I think that might be as close as we're going to get on the immediate approach. There's that support trigger I highlighted last night. Looks like it's going to make a break. Again, today's close is what matters. This means nothing right now until we see the close of the candle. But again, a trade I'm kind of like focused on as we get into the ECB announcement. If the euro breakdown materializes and all of a sudden you see a break of 106, okay, on euro dollar, I think this is going to be a beautiful pullback trade. If this thing mounts a break above 123.47, there's really nothing to stop it from going all the way up into 127.50. This, I mean, you might have a swing high here, a decent pivot near 126.30, but basically you're looking for that rally into structural resistance. So for me, the levels are exceptionally clean here on euro yen. If you see a break below the monthly open, look for that drawdown again to key support near 119.50. You know, I'm not really looking to play this range per se. A topside break, I'd be looking for a pullback to play the stretch into 127.50, 127.60. So not a trade I'm in right now. I'm a little bit more cautious. I want to see more development on the yen turn rather, excuse me. If some of these yen crosses are going to finally make a turn, I do want to see that start to materialize before I take an aggressive approach. Remember, broadly speaking, I still want euro higher. So this would not really be the one I want to get aggressive on just yet. Might be a little bit more chop sideways action here, especially if the yen starts to rally and take some back from the losses that we've been seeing across the yen crosses. Guys, does that make sense? Any questions here on euro yen? Also on a long term, with weak yen and strong USD, euro yen looks good for next year. Yeah, you could see a lot of potential with this for next year. I agree. I agree. Here's what the outlook looks like for the last 2 years, 2014. And this ML that you're looking at here that we came off the yearly lows is a broad formation going back to the 2000 lows. Real long term. 2000 lows, 2008 highs, 2012 lows. Just missed the upper parallel, but if you take a parallel here, it's locked. If you take a parallel here, it's actually, look at that, right on, literally. So adhered pretty well as support. Certainly there's room. Someone saying euro seems to have found some support. Yes, here's the break above 30. So you're starting to get the onset of the beginning of what looks like a decent turn. Again, we'll want to see this 5-minute candle close here. On a pullback, your stop against 103, 106.39 at this point. It's going to open it up a little bit, guys, but you don't want to stick too close to this during event risk because obviously there's more liquidity in the market. You'll see those larger swings, and the market has more push behind it. So it does look good for a hold, at least near term, at 106.60, 106.50, key support. Okay, questions on Euro Yen. Let's segue real quick into dollar yen since we're talking about the yen. That'll be number 5. Here's what dollar yen looks like real quick. Boom, 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 dollar yen. Draghi says steady hand is key for central banks. That's funny. Calls Trump administration radically new. Says Brexit Trump will have medium, long-term effects on the market. Says reforms are needed regardless of the political situation. All right, I'll continue bringing you headlines from this. Here's what dollar yen looks like on the daily, guys. I was just chatting with Eileen likes that, right? I was just chatting with Jamie about this. Look, it came right into the monthly open again, and it's holding as resistance. It's very, very interesting here on dollar yen. Here's what the near-term chart looks like. Look, and I was just expressing my frustration to Jamie. I've been looking for a spike into 115.50, 116 for over a week now. I'm starting to give up. I think as you get deeper in time, more time decay, that level becomes less important because of where we are in slope. Obviously, it's a longer dated 618 of the yearly range, off the decline from 2015, which in and of itself is big, very big, decent pivot in price over the years. But I just don't know if it makes it into that region. Typically, as you hear us say often, typically when you're looking at a trade and an idea and you start to give up on it because it just hasn't materialized, typically that's when it starts to play out. So I don't want to put that expectation out there, guys, but I'm looking for some sort of exhaustion play here off 115.50, 116. If it breaks this slope, former slope resistance, now support, if it breaks this to the downside, a basic weekly opening range break, a break below last week's low, that might give us a downside move towards 111. But until we break this range, this thing's a coil. It's not. Let me take a step back. It's not from a near-term trading prospect. I've been getting a lot of questions on it. From a near-term intraday, this is our weakest candidate because the ATR is tight. You haven't really seen much, play. It's a simple weekly opening range that's taken shape just below the monthly open. Here's your monthly open, the purple dots. Here's the weekly open, the gray dots. You've just been coiling up. So look, if this thing spikes into this region, you get a quick failure. I'd like to see a much steeper correction. If we break higher, same thing we went over yesterday, is really nothing to stop this from going 118, 119.43 to the upside would be near-term targets. On a pullback, 111.45, 111.50, sort of where I'd be looking for more stringent support on dollar yen. Any questions on dollar yen? When it moves, it moves. When it doesn't, it really doesn't. It just sits there. So the abomination, testing our patience here near term. Questions? Dollar yen going once, going twice, and off to Aussie dollar, number 6. Here's what Aussie looks like, trading at 74.70 at this point. Look, resistance is resistance until it breaks. We quoted a downside bias sub of 75 early last week. Every approach into 75, if you've taken a short, you've gotten your quarterly ATR, no problems. As I said last night, I'm weary now about really testing, continuing to really get aggressive on shorts off 75 just because of what the dollar is doing. A quick segue to what the dollar index did last night. Guys, we spilled last night and tagged a major key support. Oops. I want to show you the daily chart. Right here. Right? The levels that we highlighted early in the week. We were looking at this yesterday. Boom. We spilled, completed a 1618 extension right off the highs. That's also the high day close from January. Really nice rebound, and here's the outside candle of support. Again, near term, you're also seeing momentum rebound right off 50. Okay, near term, yeah, that's a nice area to find some support to find that swing. Doesn't change the broader outlook, but certainly gives us a little bit more of a pause here. You could see your dollar stretch a little higher, which is why for Aussie, I don't want to get much more or too much more aggressive off of shorts from 75. So I'm going to put that sort of bias on a little bit more of a softer conviction stance at this point. You know, this is a 4-hour chart, guys. Here's a 2-hour. Here's a 1-hour. Again, you know, every attempt, here's a 30-minute. Every attempt at the 75 handle, you've gotten a really nice short, really nice short, really nice short, nice short, nice short. Okay. Eileen said looking for the long side instead on Aussie dollar. What would be a good, or where would be good to look? So here's what I would say. I wouldn't want to get long yet. At this point, I want to see a reaction, a firm reaction. Here's what I would say. So something I was looking at, you know, I don't really want to stress that just yet, or that kind of slope, but if we do a little trickaroo here, sorry guys, I'm a little anal compulsive, got to get my lines right. So if you see that there, right, basically what I want to see is the pivot off this mark. Let me just answer your question straight out, Eileen. No, I still am not interested in taking longs. What I would be saying is if this comes into here, I would still be looking for short exposure. I would still be looking for those scalps, but I'd be trading 1/4 the leverage I was trading on those previous shorts off that region. Why? Because this is coiling up. And now this has become even more so of a critical resistance range because near-term price action has responded there. So for me, if this pops, it's going to see a run on 75.50, maybe even that critical region of resistance up into 76. That's the broader bearish invalidation level. I don't want to be a part or sitting in a short on that kind of run. So for me, if it comes into this region, yeah, I still might be looking for a short, okay, but really tight stop against this high. And, you know, if it breaks, you're probably not going to want to chase it, Eileen. You know what I mean? You're probably not going to want to chase it at that point. Your stop will have to be way too far out. So if it breaks 75, I guess I don't have a play, is a simple way of putting it. I'd be looking for that stretch into 75.50, look for resistance, if not 76. But resistance is resistance till it breaks. I just don't like the way it's coiling here. You know, one of these approaches, the drawdown or the reversal off 75 should have charged a break of the weekly opening range. The fact that every time we've moved lower, we still held that weekly open. Now we're starting to hold uptrend support. Has me a little concerned. Has me a little concerned. Broader picture for the Aussie, don't forget, you know, still pretty clear. Still pretty clear. Key resistance, 100% extension off the lows, 38.2 off the high, median line resistance. Everything's still in order here. You know, 75 is still pretty big. If we break that, there's your larger bearish invalidation level, former trendline support off the lows, 100-day moving average, a 1618 and a 618 retracement extension. Huge region, real critical. Okay, the coiling up and waiting for more reaction makes sense. Longs, not yet. Yeah, not yet. If we clear 75 and you get some sort of decent pullbacks, Eileen, it tests 75 again as support, sure, go for it. Look for that rally towards 76. But right now, below 70, 75, the risk is still for the spill lower. I would look for a reaction from long-term trend line around 76, tagging the February and June lows. So, Mike, that's the broader idea, Mike Schneider. If that breaks to the upside, that's the broader idea. 75 breaks, sure. But as it stands right now, it's resistance. You know, I can't advocate buying into it until we clear it. And the fact that even the last couple of attempts on a break above 75 failed, you're waiting for the decision. You're waiting for the market to make a decision on it. Questions on Aussie? Okay. Quick segue back. Whoop, hold on one sec, guys. Quick segue back here just to see what current price action is going on the euro. Again, so just to give you a quick study on what I look at here, see the recovery, momentum, went into and above 60 here and into that, basically went for a tag of 50 and failed. Okay, so the immediate risk still leaves a little bit more for a downside into the US Open. Okay, this on the approach on a divergence move here, and I'm talking real near term here, guys. When you're looking at divergence on the 1 minute chart, great. You did get a nice move down in lower in price, higher lows here. Great, 60 or a 40 break to the upside, sure. But you want to see that materialize into the basic stuff that we look at with RSI. Remember, in downtrends, we want to see 60 hold resistance. In uptrends, we want to see 40 hold support. Very general, very larger generalizations, but in near-term price action can give you that tell. Okay, is now the right time? What's momentum doing? So again, look for this to maybe drift into a lower low here. Look for the divergence to be a little bit more apparent in the 5 minute and a more stern recovery above 30 here. I think you get it. But if you thought that we kind of just missed that low, this is why we like to wait for the US Open. See if we can't get another drift here. If this fails and moves higher, and if we get some sort of trigger, I don't see anything that's kind of pointing out to me right now, but that would be a decent move with a stop against the low now, even tighter. That actually is 3-point touch right now. Something to watch. 5 minute. So you got to wait for the 5 minute candle to close to validate the break. But we'll see if we can't get some more basing here heading to the US Open. Would you accumulate position long? Yes, Mike. I am a big advocate of using leverage as a means of both risk management and pressing or loading up heavier on the trade. So yeah, a lot of times, let me take a step back, Mike. The main thing that I do, the more prominent part of my trading is to get in a little bit more aggressively on my entries and then scale out. Scaling into a position is something I do on longer term trades. I don't like to scale in intraday because if you're watching price action too close, you could really make a mess of things. So if you're trading intraday, I typically will have the position. I'll scale out as we get through each target, bring my stops up, and I'll play with the house's money once we cover it, right? But on a scale in, I wouldn't really do that so aggressively on the intraday. That's more so if I'm looking to build up into a larger, multi-day, multi-week position. Make sense? Cool. Cool. All right. Any questions on Aussie Dollar? Watch 75 resistance. Pretty major. Next up on tap, dollar CAD number 7. Here's what dollar CAD looks like, or looked like. I guess the last update was back on the 4th. Okay, so again, we went over this yesterday, the break below, or the test, I think yesterday we were talking about the test of this key support. We've now broken below it. We've tagged 32, which was the next downside target, and now we were right back into resistance. So near term, immediate risk is still lower, sub 32.58. You can see that we've been straddling this median line really nice. Support, support, resistance, 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 support, support. Right there. Here's what we look like on the 2-hour. 4 and daily. See that 100-day moving average? See momentum sort of kind of pitiful here. I don't like it. I don't like running after this trade right now for dollar CAD. You could see a pretty decent rebound off it. I think that the broader picture still remains short. I know that Jamie's looking for some short exposure on a decent rebound here, and so am I at the immediate levels right now. I just don't, I can't advocate selling to that 100-day moving average. The break below this support, if it was going to be more prominent, and I tell you guys this all the time, when you see these support breaks, I want to see a run. You see what happened the last time we broke a major level that we were looking at was right here? This is the kind of reaction I want to see once we break a major support. These kind of like dilly-dallies below support, the slow grinders, have me a little concerned, and typically, those can whipsaw you pretty quick. So I'm more stand pat on dollar CAD right now. I don't have any sort of new imminent guidance screaming at me. I think the immediate risk remains lower, sub 32.58, as far as trying to gauge new entries on that level. Break below 32, you're looking down into 31.40 is your next downside target. Pretty decent pivot in price. Broader bearish invalidation, what would put me a more constructive would be a break below the weekly open, or a break above, the weekly open. So immediate focus is lower sub 32.58, looking for shorts. If it breaks above the weekly open, you'd look for a tag all the way up into the upper parallel, maybe even 33.80 on that type of play, but immediate focus is still lower. That is dollar CAD number 7. We covered dollar yen. Okay, let's touch on sterling yen. We did that more in-depth update yesterday. Here's what pound yen looks like now. We're still holding essentially the weekly opening range. We came into this resistance. We talked about the significance of that resistance yesterday. I just wanted to highlight that this is still the game plan, and the main range that we talked about yesterday, the weekly opening range low, that trend line support or that median line support into this region at 145. 42 or 40, this is still the main range we need to see a break of. We're favoring a downside break for a correction lower. Just a correction. Inevitably, you'd want to buy it. Specifically right here. If we get a drop into 138, I think that's like a sweet spot for possible exposure on the long side. But the risk does remain for a little bit more of a setback while below that 145.40 level. So watch for a break of the lower the weekly opening range low. Keep in mind it coincides very nicely with the monthly open, so 143 or just below. So this region right here, I don't know why these are not highlighted. Right there, a break. You're basically looking for these downside targets into this key region. You can see here clearly on the daily chart, and the significance of this high is pretty important. Okay, if we break through this, you're basically looking for a run on, 148, 148.80 would be a first target. It's a longer dated slope line. And back into 152, essentially, 151.97. Pretty clear. It's pretty astonishing when you look at this trade, guys. Essentially off the vault from the November low, you have just 6 down days. It's unbelievable. Here it is. Here's the low from November. You have 1 down day, 2, 3, 4, 5, 6. Don't ask me why I know that, but I was just staring at this. It's pretty remarkable. So, don't underestimate the power of the trend here until we make a break lower. Adam, you love it, right? The Widowmaker. Approach with caution, not a beginner's trade by any means. So if you're newer to the strategy, you want to tiptoe around this trade. I don't want to scare anyone out of any trade because I do feel like you need to get your hands wet. You need to be in it to win it. Unless you get your hands dirty, you're never going to really learn. But you want to make sure that you're utilizing your leverage in a smart way, specifically on a trade like this. So keep that in mind. That is pound yen, number 8. Let's just touch on pound dollar. I don't want to really stress it too much because it's the least favorite pound or dollar cross in my humble opinion. The only thing I wanted to show you is this. We talked about this earlier I think last week into the close. I can tell because of where the marker is. We were talking about this upper median line parallel. this 1985 slope support. Yeah, that's not a typo. Here's your monthly chart. Okay? Just to tell you where it's derived from. Slope resistance, simple parallel off the lows, caught one, a little messy there, but caught twice, caught 3 times, broke, acted as resistance. That validates the slope. Extend that same slope off that 1984, 1985 low. Once we broke it, remember what we just talked about? What happens when we see a break of support? We want to see that run. We don't want to see the dilly-dally. We want to see a run, test of resistance, rejection, run, break below that 1985 slope, run. Well, that slope comes in right in line, back to the daily chart, comes in right in line with the upper median line parallel for the current operative slope we're following here in blue. See that? And there's that 1985 slope. 100-day moving average is just above it. Big region, right? Important. Something very important to keep an eye on. So not surprised to see a little bit of a downside push. How deep this correction goes, I don't know. I have us at near-term support right now at the previous monthly high day close. It's basically 126 right here. To be exact, the close of the 11/11 high was 125.96. So we're basically right there. Low in price. Just want to see what this looks like. Basically right there right now. Yeah, I'll be watching this on the daily chart, but watch that support break. If it does move, look for a move into the monthly open, i.e. this confluence region down here. Okay, so let me just copy this right here. You're basically looking at the 2016 low day close. That's still correct. That's still preserved from the low that you made back in, what is that, October. So that comes in alongside basic trend line or channel support, monthly open. That gives you a range between 125 and 124.40. Okay, I know it's a bigger range, but just to keep that in view. Here's what it looks like on the intraday chart. And you can see, again, right, we talked about possible divergence on the last couple of highs there. 50% retracement looks like it caught. Really nice rejection. And then the attempt failed again right ahead of the upper parallel. So we do think, you know, this was the opening range low for the week. I don't know what to do with that. I would interpret that last low that we made yesterday as the new opening range low for the week. So you're basically still holding the weekly open. I still think the risk is for a downside push. And that's why I think pound yen, if you do get a break of that near-term support, look to play the downside. And inevitably, like I said, inevitably we want to buy that. But near term, that's kind of, I think, what the risk still remains is on the pound. Even more stuff there. Again, 24.98 is 100 off the high. Monthly open. The 50 line of the current descending formation. Basic trendline support off the lows. You know, well, let's go ahead and just adjust that. Be a little bit more aggressive, just for the sake of it. All converge right there. So you know the level of where we'd start to look back for the long side, but as it stands right now, the risk still remains, I think, as long as you hold sub 27, specifically 27.60. Okay, I'm over on time, but I'm not going to leave until I get through the commodities. I know Conwall is waiting on those. Crude, silver, gold, I don't have an opinion really on gold, but we'll go through it anyway. Here's real quick what oil is doing. Yes, so I was just looking at this. I still look for support just below 49. I think Jamie's looking at something similar. The same level that was former resistance, a big pivot. I know that we talked about this, at length, Conwall. No change. 48.90, 48.78 into 48.90. Big region. We've talked about that over the last couple of weeks as a major pivot in price. A near-term slope that I just added on looks like the lower parallel could be converging there. Now, also note that the monthly open is right there. Big region. So that's the area of support that you really need to focus on near term for this pullback. If gold, crude still has more upside to go, that's where I want to see this thing hold. Okay, if it goes sub 48.78, 48.79, I think you're kind of flirting with disaster. So look for some support there within the confines of this broader rebound in price. That also coincides. Here's the daily chart, a little bit bigger of a view of how critical of a region that has been, and again, the monthly open. All right. That key region of resistance, although we spiked through it, we talked about that yesterday, right? Couldn't get a close above it. And the fact that we closed lower on a reversal day, closed at the lows, kept the focus lower, I still think you risk that drop into 48.90, 49 region. That's where I start to look for more prominent support. That's crude. Moving right along to gold, silver. Here's what silver looks like. I think silver is cleaner than gold is at this point. Here's what the near-term picture. Remember, we added this slope last week. Looks like it's still holding pretty well. Keeps the focus, immediate focus higher while above 1688. Near-term support, that's right here. Former range highs, the median line off the low. The top side stretch, that target is unchanged at 1739, 1740. You're looking at a 50% retracement. Also, the 100% extension from the advance. Interestingly enough, you see how that 100% extension, that's a long dated extension. But guess what? If I take one off the lows, look where the 1618 comes in. Same exact level. Look where the 100 comes in. Highlights support. Okay, so very clean levels for silver. Keep that in mind. Still think the risk is for a rally towards 1740 before all is said and done. If you break 1688, look for support at the monthly open. Okay, so that is a quick look at what's going on for silver. For gold, just to touch on it, but again, I'm not really a big fan of it. Every time you try to fit a formation or some sort of technical structure to the advance, it just kind of does nothing. So really tight weekly opening range, hadn't done much. I still think, again, you can risk a little more prominent rally or prominent recovery before it breaks lower. But the longer scope picture, like I said, for gold, in my humble opinion, still think, you get a more emotional drop into key support near 1130, 1120. That said, key resistance still 1203, 1200 here on gold. I know that they're making some divergence into the lows. It's sub 30, so very weak divergence, but it's there nonetheless. Keep your eye on that basing possible in gold. Okay, guys, I know I went through a lot, and today's session was a little bit more ad hoc as we were trying to cover some of those comments coming out from Draghi. If you have any last-minute questions, do let me know. This is the last session for the week. Again, don't forget, Jamie will be up at 12 o'clock with his midweek strategy webinar. So make sure you put that on the schedule and bring your questions for him. Eileen says, all good. Enjoy the rest of the week and see you next week. Thanks for clear steering. Hey, Eileen, my pleasure. Conwall, same to you, my friend. Adam, Mike, D, guys, have a great weekend, and I will see you. Remember, Mondays are free webinar and daily FX, and Tuesday, Wednesday, Thursday back here on SB Trade Desk. Last full week of trade, and the FOMC is on tap. So make sure you get a good weekend's rest because next week is likely to be a doozy. All right, guys, I'll see you then. Cheers.